David, you chaired the AP conference in Adelaide this week, and the central theme was that cost blowouts and capacity constraints could threaten this kind of massive pipeline of LNG projects we've got underway. You've got a $16 billion coal seam gas to LNG project in Queensland, right next door to a BG project, which recently announced its cost of blown out by $5 billion. Are you experiencing those same sort of pressures?
Yeah, I think the key thing, the really big message at this conference is, yes, we've got $180 billion of projects in the pipeline. They're actually sanctioned, approved projects. The real question is, will we be able to prove the next phase of projects that go beyond that $180 billion? That's really where been the core focus of the conference has been. And it's really been around our ability to operate safely, our ability to gain the trust of all the communities, and also a request of government, a very clear request of government. In order to invest the future wave, we need stable fiscal and regulatory environments in which to operate. So those are the key three fundamental themes that are associated with this conference.
But if one of those existing projects in the existing $180 billion pipeline has already had a 33% cost blowout, what hope have we got of that next generation of projects?
I think the key thing is everyone knows that Australia is an expensive place to do business, but equally everyone also knows that the extraordinary investments which have happened in this industry have come about because of the rise in Asian prices. The key thing for us to manage is obviously our cost base in Australia, while also staying competitive so that we continue to sell, in our case, gas, but there are other commodities, but in our case, gas, into the Asian market. So yes, a number of parties in Australia are under cost pressure, and the key thing for us is to manage that cost pressures in such a way that we actually deliver our projects, that they actually work, and they're actually ultimately will create enormous wealth for Australia. So what we as an industry are focused on is delivering that $180 billion of projects, selling the gas into the Asian market, and creating vast amounts of wealth for the whole of Australia.
Sorry, David, is your project blown out by 30% in terms of capital cost?
The issue on capital cost is clearly projects are under pressure as they go forward. In the case of my project, which is the easiest for me to talk about, then we have worked with three very big contractors. Bechtel, Saipem are building the pipeline, and Fluor are doing the upstream. So we've chosen a contracting philosophy whereby we have lump sum with Bechtel, lump sum with Saipem, and a target price with Fluor. So we've sought to manage the costs in that manner. Obviously, we've quoted the projects in US dollars. So some of the increase you see, some of the headline increase you see, is because clearly the Australian dollar relative to the US dollar has been very strong. But for a company such as us, which is an Australian company earning money in US and Australian dollars, then in fact that doesn't actually make any difference to our bottom line, though it does increase the headline prices. And I think you referred to earlier in an earlier question about the BG project, half of their increase came from the fact that the US dollar has been so strong, the Australian dollar has been so strong relative to the US.